Hey, Paragon traders, it's Matt. Just wanted to go over an indicator with you. It's pretty important. One of the most commonly used in the technical analysis space. The MACD stands for Moving Average Convergence Divergence. That's a mouthful, so thank goodness for the MACD acronym. Uh, but it's built on the relationship between short-term and long-term averages. So what that means is there's an indicator line, which in this graphic is the lighter blue. And then there is the both the slower and the moving averages that you set. And usually the settings are, the default is 12, 26, 9, which are the number of periods. So depending on what time frame you're looking at, the chart you're looking at is. If you're looking at the hourly, it's the 12 hours prior, 26 hours prior, and 9 hours. And that's the fast one for this indicator line. The other two are mixed to form the baseline. So, and then if you're a high frequency trader, a shorter term trader, this is the other common setting that is for you guys. I've tried both. I used to be a lot more high frequency than I am now. So I go back and forth. I try them both, see what you think. But yeah, these are the settings, and a lot of people use it differently than I use it. A lot of people use it for both their buy signals. So when the leading indicator crosses above the baseline, people take that to mean, okay, that's a buy. I'm going to buy there. And then when it crosses, see, this is why I don't do it. I don't use it for this. When it crosses, it looks like it crosses there, but it doesn't really cross till there. So if anything, I would say use it for one or the other, not both. So in other words, don't use it for both a buy and a sell signal. Use it for either I'm getting in now, and use your other criteria that you've come up with through your simulations, through your live trading, as an exit strategy, or vice versa. You have your entry strategy down. It's worked pretty well in your simulator trades and your live trades. Stick with it. Don't fix what isn't broken. I'm not trying to do that with this video. I just wanted to explain what this indicator is and what it means. And we can do that. Let's go to a chart and look at what's going on here. So this is the MACD indicator right here. And the way I use it is this. So when both of these lines are moving in the same direction, well, that's a good thing. It's a better thing if they are getting further apart from each other. And that's what this histogram behind it is showing us. This is showing the distance between the two lines. So the distance is continuing to get further apart. They're diverging further. That's good. And the slope, I mean, obviously we can see what happened in the chart. The slope of the lines tells you the strength of the trend, as does the distance between the lines. So the white line is the indicator, the lead, and the purple is the base. Let's see what settings I have this on. Inputs, yep, I have the short one. 9, 17, fast length, 8, 17, and the signal is the 9. And always have it on EMA, by the way. Well, try it, SMA. I do the EMA because I am a shorter term trader. So whatever fits your trading style best. Anyway, so the reason I like the MACD is I don't necessarily use it for buy or sell signals. What I use it for is when I see these two lines converging. So we start to see it here. See this pillar right here? Suddenly it's shorter than that one. So they're converging there. That tells me that a consolidation is likely happening. And as we can see, it does happen. That's a consolidation event. And you would expect that after such a huge move. I mean, look at the Bollinger Band. It stretches out. This is the width between the Bollinger Bands. Stretches way out. And so when these two lines start converging, it can mean a number of things. First of all, what it definitely means is there's a consolidation going on. This, we know, is not a lasting equation. A price chart cannot continue to do that into perpetuity. So this had to end at some point. So let's not get panicked, because that's not a huge drop from there, this pillar from there. But then we see that it continues to converge. And then right here, this is when I get concerned, because the slope, I mean, look at how drastically the distance between the two lines converges, and ultimately it crosses it. So that's, in that way, it has some predictive power for me. I see it converging, fine, but then I see this, and it makes me want to run for the exits, because this is a massive, I mean, that's like a 90-degree angle right there. So, and down here as well, you have this downtrend. The trend is getting stronger. Then right here, I'm going to come up here so you can see these little pylons. Right there, you can see there's a consolidation event happening. But then look at that slope dramatically reverse. And we can see that that's what happened. So again, when they're going the same direction, getting wider apart, a strengthening trend, you're fine. When they start to move together, as you can see by the histogram, it's consolidating. Now, it could just be consolidating for a high base in this case. But after a run like that, doubtful, but it could. So right here, I'm not concerned. Here, I'm getting out. I don't like that slope. It's I mean, that slope isn't messing around. It's got one thing on its mind, and that's moving the price down. So you can see again here, as this trend went, lines are both heading the same way. Lines are getting further apart, and we can see that. Then there's a consolidation event. All right, let's come and look at this one. Same thing. So sometimes you'll see that they kind of just meander together, just mosey along. There's nothing really exciting going on. I definitely stay, and you can see in the chart, we've spoken about charts like this where they're just traversing the 50. Nothing great is going on that you want to get involved in. Now, when I see something like this slope, because the baseline is still, doing like that looks like a your standard probability curve, bell curve. But all of a sudden this shoots up. I mean, that's got to be what, 7-degree angle? 7D, by the way. So headed both in the same direction, but these three pillars here tell you that all of a sudden this trend got really strong. And it does the same kind of thing that it did over here. It shoots up at a parabolic rate. And by the way, look at the Bollinger Band widths over here and over here. So, and then suddenly it doesn't even go flat. It goes less than flat. So it's converging from here on between these two lines. So I know it's consolidating. And then that slope compared to the bell curve here, I don't like it. So really volatile stuff that's been happening here. This is a chart I just pulled up at random, but it had some good stuff to show you. So once again, I don't get involved when they're just intertwined like this. It's kind of like and we understand why, given what the MACD is, moving average, convergence, divergence. But you can it makes sense to look up here and see the 20 and the 50 doing the same thing, just kind of hanging out together. You don't want to get involved in that. Those aren't trades we like. But when they do this, not that it's going to be this drastic, these are pretty exaggerated examples that I'm showing you here. But it proves the point. I wanted you to be able to see the point. And again, down here, now don't get scared if it does something like that. Again, it's not a drastic convergence. I've been in trends where it does that, and then it may even come touch this line, but it's not drastic. They're not very exaggerated moves. So let's look for let's go. Wow, that did not help get rid of the noise. Let me try to find. Okay, so got a high basing pattern. We'll call this this run up here. Passes the prior swing high, keeps going, and then gets stuck, and we've got this high basing pattern here. Right about there. Okay. So we've got the MACD. Let me spread it apart a little bit so you can see it a little better. So the trend's going well, getting further apart, and it starts to converge. And it even, like I said, it can even come down and touch the baseline. That doesn't mean the trend's over. These aren't big differences, big divergences between the two lines. If you want some frame of reference, just go back in time a little bit and see what is significant and what isn't. These right here, these pillars right here are nothing compared to these, right? So let's go through this base. So it comes in, it's consolidating, comes down and tries the 20, tests the 20, it bounces. It seems like it keeps testing the 20, bouncing. It even went under the line. That's why I don't use this as a buy or sell signal. If I had sold there in this pattern, look at all that money I left on the table. Right? So make sure you're watching first and foremost the primary indicators, which are, again, candlesticks, volume. So price action and volume. Those are the primary indicators for a reason. All of these other things down here are just secondary, just giving us confirmation of what we're seeing in the candlesticks or the price action, which shows us the supply and demand in the volume. All right, so then it comes out of the base, it breaks above the base. Okay, we're good again, right? And the MACD surely shows that. And then it starts converging again, but it's doing it very, very slowly. So again, we have another base that's happened up here. And we'll have to see where it goes. The fact that both of these are heading down, I'm not a huge fan, but remember my video the other day about the Bollinger Band width. This down here, that's about as low as it ever gets. So this thing's going to break out one way or the other. Now, can I see this going boop? Yes, that sound effect was actually me. I don't have a keyboard in the room. So can I see it going like that? Absolutely. And this could turn around and just start following it up. But this tells me that the Bollinger Bands are ready to be expanded again, one way or the other, with price action. Although we have no volume down here. It is now 3:03 Mountain Time, and this is officially what we call the witching hour. So there's no volume going on. So I wouldn't even trade this thing. I mean, look at the spreads. You've got the bid and ask that far apart. That is not fun to trade. So do not trade between 3 and 4 Mountain Time. You're going to see a lot of bad trades at that time. Trust me on that, and don't do it. There's just no volume, no liquidity. Anyway, so that could go that way, or at 4 o'clock, we could see this thing go, the other way. But what we do know, I mean, we go back as far as you want. Whenever the Bollinger Band touches there, something significant happens, right? It got that low here and dropped off a cliff. Whenever it gets this low, something significant happens. So we'll just have to wait and see at 4 o'clock what happens. This will be one of the currencies I'm watching as we come out of this lull, where really not many banks are open, just on the West Coast and the Mountain Time Zone. But the rest of the banks in the world are closed. We got to wait until the Asian banks open. Anyway, so this is what the MACD does for me. It just shows me potential consolidation events. It shows me potentially reversing price action when the slope is so much different than the slope in the baseline. And it gives me that heads up. And something I like to do when I'm looking at this, for example, in this base, if I want to see, when it's going to do this right here, I'm going to get, let's see, I'm going to get an arrow. That would be better. So something I like to do is I'll look at the 15 minute. So here's that lower base. And let's spread it out a little bit. See, it doesn't really show in the 15 minute. I mean, it does show that we're coming out of it. But this, I want to make sure, this is something I do for confirmation. I'm on the 15 minute now. I'll go to the 5 minute. As we're coming out of that base, I'll go to the 3 minute, which is right here. It shows the same thing. 1 minute, I really won't go to because it's so fickle. But I want all of these time periods to agree that it is diverging and going in the direction I want it to go in. Same thing if you trade on the hourly. So right here is that base we drew. I drop down to the 30 minute, make sure it's showing the same thing, and it is. And we know what the rest are showing. I just want to know that the latest and greatest sentiment is what I think it is. That's why I'll drop down to those shorter time periods and make sure, okay, they're both going in the same direction and they're getting further apart. And that's the direction I want it to go. So all good. All systems go. Let's see if there's anything more here. When does it fail? Remember this. So, and we looked at this. So when does it fail? When the currency pairs stops trending, or when it's choppy, just kind of meandering, the 20 and the 50 are just kind of hanging out together. That's when it especially does not work. If the pair goes choppy, like I said, not going to work. If it's range bound, same thing. That's like saying when the 20 and the 50 are just hanging out together. It's range bound, there's nothing going on, and we're not going to see anything. So that's when it won't work. The trend reverses. Yeah, I disagree with that one because we just saw two trend reversals that it did show us happening. So scratch that off the list. That is not accurate. For example, I'm pretty sure this trend reversed and that one. So it definitely worked in showing us that that was coming because of the slopes. Look at the slopes between the two lines. And this is the fast baseline, right? So if you've got the 9 EMA doing that against an 8-17-9 setup, that's pretty significant. That's going to be a significant drop off and a price movement. All right, guys, let me know if you have any questions about anything here, and we'll see what happens after. Let's see, it's 3:10 now. In the next 50 minutes, we'll see what happens when the Asian session opens up. All right, bye-bye.